So guys, coming to revision series. Okay, revision series. Now we are in what or which chapter? Come on, revision of, audit of. Now, once it is revision, what I want you to do is either you can reply, even record people you can say, or you can look into your notebook. Revision is just like in the it's like a capsule. It's like a full summary. Okay. So you can open your notebook, or I say material means it's little voluminous, or my material, anything you do. Okay, audit of NBFC. NBFC is which chapter? Chapter number 14 in our material, and approximate weightage is 4 to 5 marks. First one. First heading which we studied is what is NBFC? Now, what is NBFC, Pillare? What is NBFC? As per section, which is the section dealing with NBFC definition, it is as per section 45 IE. IE is registration. As per section 45I, NBFC means it is a financial institution, basically company, but principal business accepting deposits or advances. It is or any other institution as RBI states. Now, before even starting this, you remember we divided NBFC into two types, NBFC D and NBFC ND. ND was divided into NDSI and others. These two, we said it is big brothers, they come together. And this is small. Now, for an institution to be classified as NBFC, it should meet dashes to dash criteria. What criteria? 50:50 test you have to meet. So that is the first part, which is what is NBFC. Can we move to the second part? Difference between bank and NBFC. Okay. So difference between bank and NBFC. Yeah? Bank can accept what deposit? Bank can accept demand, but NBFC can accept only dash deposit. What deposit NBFC can accept? Term, not demand. Bank are part of payment and settlement system. They can issue checkbook, whereas NBFC cannot. Bank, what was this DICGC? Some cover. Bank deposits are covered under insurance, whereas NBFC, no. Not only that, bank has a minimum exposure to priority sector like health, education, agriculture, all. Whereas here, you don't have such requirement. So, very important that demand deposit, they can accept only term deposits. That was asked once for the MCQ. Are we clear with the second heading, bank versus NBFC? Yes. So, can we change the gear? Features. Features, and now we will say, instead of showing, we will say. First step, we have to obtain what? COR. But a COR has to be obtained from whom? RBI. Under section 45 IA of RBI Act. Same thing, link was there where Caro clause number 16. Now, there are certain NBFCs who are not required to obtain COR. Like, you remember those NBFCs who are not required to obtain COR, like Nidhi Company, Merchant Banker, here, Nidhi Company, Housing Finance, Merchant Banker, all those. Why? Because to avoid dual regulation. Now, this is important because numerics is there. When a core investment company has to obtain registration, if, if it is accepting deposits and more than 100 asset size. So that was the first feature, which is regarding COR. Second, what is the minimum net owned funds? Minimum net owned funds, it is 10 crore. You remember NBFCs which are Kutti, we grouped into 3 Kutti NBFCs, P2P, AA, having no public funds. For them, instead of 10, 2 crore. How much amount you should transfer to reserve every year out of PAT, profit after tax? 20. Now, can you utilize this for general purpose? No. For what you can use, you have to disclose in notes. Now, how much is the capital adequacy ratio? Maklai, how much capital adequacy ratio we have to maintain? 15. Now, tier 1 plus tier 2, 15. Now, tier 1 alone, it should be at least 10. If it is gold business, it should be 12. And what is the formula? Capital funds divided by risk-weighted assets. Risk for cash, approved security, central government security, it is always 0. Now, for 2 things, there was 20, Pillare. What was those 2 things for which risk was 20? Central government claim, not state government. I mean, sorry, state government. I was checking. State. Then bonds of public sector banks, state government and bonds. This is 50. Any other case, it is 100. But this was continuation of which concept? We finished COR, we finished net owned fund, then we finished features. Then we finished statutory. This is capital adequacy ratio. Can we proceed? That just your work is just to turn your books and revise now. It's not teaching, so that's why I'm going fast. There are prudential norms. How many norms? Prudential norms. There are 3 norms. 1, asset classification. 2, income recognition, provisioning. Maklai, here what I will do is, I will ask you question. Is that okay? So that it will be revision. Yeah. But for NBFCs, usual cases, Sada cases, when it will be NPA, can you say if outstanding default for more than 6 months? In NPA, till when substandard? Up to 18 months of NPA. After 18 months, it will be doubtful. If it is irrecoverable, loss. Now, this 6 months will be replaced by 12 months if it is which type of NBFC? Hire purchase or lease. This is for which type of NBFC, NBFC ND, usual, Sada. Now, if it is big, Bada, what is Bada? NBFC, SI and D. This 6 is replaced by 3. This 18 is replaced by 12. Even this 12 is replaced by 3. Income recognition, you know very well. If it is NPA, dash basis. If it is NPA, what basis? That is very easy. Receipt, otherwise approval. Now provisioning. Come, I will ask you. How much is the provision on standard asset? 0.4. How much on substandard? 10. Doubtful limit 3, up to 1 year, 1 to 3 and more. 20, 30, 70, 50. Loss of 100. But if it is unsecured, 100. Now, what was that 0.25%? That is in case of Kutti NBFC, ND. So this 0.4 will be for NDSI and D. Makle, let me ask you, are you able to catch up in the flow? This is just revising time. Okay. And then one more feature we said, difference between Schedule 3 Division 2 and Division 3. Division 2 is for Sada company, Division 3 is for NBFC. Now, what is the similarity, Bullare? Both these cases, what is the similarity? Similarity is Ind AS and both are company. One is general company, another is specifically NBFC. That we will discuss. Come, financial, non-financial. Here, current, non-current. Second, based on liquidity. Third, revenue or expense exceeding more than 1% in NBFC. In SADA, 1% or 10 lakh. Next points are all disclosure. I will say only NBFC. Other comprehensive income on the face. Then reserves utilization should be disclosed. LLP, debt due in which director is a partner or member. Receivables having significant. This is only for which division, which I said, OCI, all these things. It is only for NBFC's Division 3, not for SADA division. Now, FRLA you'll study, but still, Ind AS will apply if from 1/4/2019, if the net worth is exceeding 250 crore. At a 1/4/2019, I asked you. 1/4/2019, I asked you 250. 18, 500. Tettano. But I take sharp 30 seconds rest. 30 seconds rest. Then say types T. 30 seconds. Your time starts now. 30 seconds. That's going to be faster. You don't want rest? Okay, even then I don't want rest. Types, Makla, can I ask you without, okay, or you want to see the screen? Yes, no, Vara, or just, no need, okay, then I will ask you. And broadly, NBFCs are divided first based on acceptance of, Makla, first one is based on acceptance of deposits, okay. NBFC D and NBFC ND. Second, based on asset size, it is divided into two, SI and ND. Okay. This asset size SI and ND is only if it is non-deposit taking NBFC. Now, based on activity, now it is going to be rapid fire. You can stay in the chat box. There is an NBFC which is like online platform they will do, bringing the lenders and borrowers. Which type of NBFC? Come on, shoot. P2P. There is an NBFC which has no operation. It's just holding the financial things of bank. NOFHC, non-operating financial holding company. Now, can you guide him what is AA? Taha, AA means account aggregators, meaning they will collect the information of customers and give it to bank. It's like agents. Then which NBFCs is pooling of loan company, asset finance and investment? ICC. Now, if it is mainly for investment within the group company, it becomes CIC. Now, only two more I'll ask, which is Kutti NBFCs. Kutti, small loans they will give. microfinance. And finally, which NBFCs deals with infrastructure? Two NBFCs are there. IDS and IFC. Now RBI has introduced new thing called as layers. Layers. And how many layers? 4 layers, no? Base layer, middle layer, upper layer, top layer. Base layer, okay, we'll start in the reverse. Which layer is empty, pillare? Top layer. From where they may get populated later on, from upper they may reclassify. Upper layer, how many are there? Top 10 is there. Base layer, how many classifications? Broadly, base 2. ND less than 1000. Now, what if it is more than 1000? ML. Now, these are Kutti NBFCs. It will be always in base layer. P2P, AA, NOHFC, and not having public funds customer interface. Now, what if it is NBFC D? Which layer it will come? Base layer, it is only non-deposit. D, it will be in either in ML or UL. Now, this SPD and IDF will be always in ML. Whereas these three will come either in ML, if it is in top 10, UL. There was a condition. If it is a government-owned NBFC, it won't go in which layer? Government-owned NBFCs, it won't go in UL. The NBFCs other than those which I've said here, like Mortgage Guarantee Company, ICC, it can come in ML, BL, UL, anywhere. Okay, TL we don't need to see because that RBI will decide. How is the Josh? All okay? All set? Are you getting time to breathe, Pulare? Come on, come on, come on. Shoot. Can we go to 5? Audit procedure. Okay, all is well, all is well, all is well, all is well. I hope all is well. Audit procedure. We divided audit procedure into 3 parts. General requirement. In that, we said 3 points we will see. 1, business. 2, internal control. 3, COR. General, business, you understand, internal control, COR. Prudential norms, we already have learned. Asset, income, provisioning. One extra point is there, regularization, whether status is upgraded. Upgradation. Now, in case of NBFC D, meaning deposit taking NBFCs, specifically we have to check compliance with RBI directions. Now, this is case of any NBFC accepting deposit. And it was flow. You remember? Flow, 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 flow. You have gone out of the flow. Deposit whether properly, NBFC whether properly classified, DND. If it is classified, maximum quantum as per credit rating. Once credit rating, deposit you can accept, deposit register. Register, once it is done, interest paid. Interest is paid, renewed. Investment should be done only in approved modes, RBI. But this procedure is only for NBFC. Then we said about fraud, and like fraud will be classified as per IPCC. Then the IPCC in the final. And come on, it is not IPCC, it is IPC, Indian Penal Code. That who has to comply? Management. What auditor has to do? 143.12 report, CARO report, SA 240. Now one more thing was there. Reporting to RBI. Now can we go to the last part? I hope you're following up. Last part. What was the last part? Last part was NBFC. You remember In NBFC audit session, we did a full integrated case study question on just reporting when give report. Very good question, beautiful question. Kindly do that question once more yourself without saying the solution. Solution tick kar jana. Okay, this additional report has to be given for whom? Board of directors. Now, why additional? Because on top of 143 section you are giving. In case of all NBFCs, what you have to say? Yeah, whether obtained COR, if so, entitled to hold NOS. Now, in case of NBFC D, deposit accepting NBFCs, deposits, all the 7 points in the procedure plus credit rating obtained, prudential norm, capital adequacy, if it is more than the limit which they have accepted, regularize. Now, all NBFCs over, D over. Now ND. Whether they pass resolution not to accept, still they accepted. If so, prudential RBI. Which RBI direction? Those 7 RBI directions which we just discussed. These directions. Now, in case of NBFCs not required to obtain COR, whether they are complying with RBI direction. Now, you will send dash report to RBI in case of qualified negative adverse. You will send a exceptional report to RBI when RBI direction, deposit direction, NDSI direction guidelines are violated. If no need to send exceptional report. Finally, we winded up by saying what? Audit procedure for ICC. Don't now close your book. Close. Don't look. Close. Exam, one question came, ICC procedure. What you will do? You are closing the book. I trust you. Para. Now, ICC comprises of which 3 institutes? You say. Which 3 types? Which 3 types will are? Lending, asset finance, investment. Now think of lending. Lending, they have to lend. So once to lend, there should be anything you can say. Proper authorization. Authorization should be given by a competent authority. Now there will be a agreement. Once there's an agreement, there will be repayment. You can obtain confirmation. Kalas, enough. 5 is enough there. Loan over. Now can you come to asset finance? Anything? Asset finance means whether it is for financing asset commercial purpose. If so, hire purchase lease properly classified, installment received. 3 enough. 5 plus 3, you got 8. Then what you have? Investment. The investment company. Think investment. Physically verified, board resolution. Investment, how to check? Contract note, depository. Investment should be only in approved modes. Prudential norms, investment, AS 13, revenue recognition, AS 9. 8. 16 points, enough. Setano NBFC. Now, people this is the material, and it's my material. So, wait. In that, chapter number 14, we finished NBFC's revision now. If you can see the material, it would be good if you can read and highlight the material. What you're going to highlight, which is not there in the books. All these are just the overview. Everything is done. So, definition, same thing. Registration, regulations, every point is just given. Difference between banks, types of NBFCs, very important. Different types, I've given 1-line explanation. Then about the layers. Then prudential norms, capital, all those, asset classification, everything will come. Provisioning, percentage. This is audit procedure. Conduct. Here you will get some little expanded version of what we have written in the notebook. Can you see that? Till now all are same. This you read. When you read, you will get that sentence. I've highlighted all the important phrases also. Then classification. This all we said. Audit of ICC. Do you remember ICC audit 20 points in material? All the 20 points, but I have highlighted. Finally, NBFC auditor's report. Okay. With that, NBFC revision is over. But what I have asked you to do then was NBFC, we discussed big question in class. Few MCQ was there, 7 MCQ. Okay. After you complete this, kindly go to the apps, take the solution and see. I will post. How was it, Pullare NBFC audit? Now you say, do you feel little confident? Okay. So that's it. We will meet again. Ta-ta.